Welcome all of you to another compliance shots of Lex Comply. So first of all, wish you all a very happy and prosperous new year. And as Lex Comply, we continue to serve corporates on compliance matters for India and overseas. Today we have a young expert with us, Dipanshu Manocha. Dipanshu is a chartered accountant with more than 5 years of experience working for KrayMan Consulting. It's an advisory and accounting firm serving corporates in and outside India. Welcome, Dipanshu. And today we will be discussing another key topic with Dipanshu pertaining to implications of gratuity, which is being introduced with the labor codes. And very recently, ICAI has come up with their FAQs and guidelines on provisioning for gratuity. So, Dipanshu, welcome to Compliance Shots from Lex Comply. And the first question and very specific question with you that what are the implications of this guidelines oblique FAQ issued by ICAI on provisioning for gratuity for the corporates?
Thank you for having me on the podcast. It's a pleasure to be here, sir. Before we move ahead, let us briefly revisit the key developments and updates that have taken place in the recent past. The Government of India has consolidated 29 existing labor laws into 4 comprehensive labor codes, namely the Code on Wages, the Code on Social Security, Industrial Relations Code, and the fourth one is the Occupational Safety, Health and Working Conditions Code. While these codes become effective from 21st November 2025, they have significant accounting implications, particularly around employee benefit obligations. To address the practical accounting challenges, the ICAI has issued FAQs on key accounting implications arising from the new labor codes. The first and the most significant impact is increase in gratuity liability. So let's discuss the primary factors that leads to increase in gratuity liability under the new labor codes. Changes in the first major change is change in wages definition. As per the new codes, wages must be at least 50% of the total remuneration, which means the codes mandate that wages must be at least 50% of total remuneration. If wages are lower, then they are deemed to be 50%. Since the gratuity is to be calculated on last drawn wages, this automatically increases gratuity liability. Additionally, fixed term employees becomes eligible for gratuity after 1 year of service instead of 5. This further expands the gratuity base. All of this leads to a significant increase in gratuity obligation for most of the entities. If we talk about the accounting treatment for due to increase in gratuity liability due to this change, ICAI clarifies that this increase in gratuity obligation is a plan amendment. Accordingly, it results in past service cost. Now the accounting treatment differs slightly. As per Ind AS 19, past service cost is recognized immediately in the profit and loss account. But as per AS 15, Accounting Standard 15, which says vested past service cost is recognized immediately and unvested cost is amortized over the period. The second key change is salary restructuring versus actuarial assumptions. Many companies are restructuring salaries to meet the 50% wage requirement criteria. Here, ICAI clarifies that a real increase in salary due to revised estimate is an actuarial assumption. But a change in salary structure to comply with labor codes is a plan amendment, as I said above. So entities must split the impact of both. The one part goes to actuarial gain or loss, but the other part goes to past service cost. Here, the pinpoint is if there is no actual salary increase, the entire impact goes to past service cost. So overall, these FAQs give clarity on recognition, timing, classification, disclosure, and tax treatments, which ensures consistency in financial reporting. Thank you.
Thank you, Dipanshu. I think that's a very calm and detailed reply from your side and really show your maturity on the subject. Last, I think the important thing is this clarification, oblique guidelines, oblique FAQ by ICAI mandatory on if yes, then what category of entities, if any, and what is the basis of that? If you can just, that's the last point we wish to have a clarity from you on this.
So this is a very common and important question. Technically speaking, FAQs issued by ICAI are recommendatory in nature. They are not like notified standards or law. However, practically and professionally, they carry significant weight. If an entity wants to deviate from these FAQs, it must have strong technical justification as well have to give proper disclosure. Uh, that's also a critical part. So while they may not be legally mandatory, professionally they are almost unavoidable.
Yeah. So Dipanshu, that means that while companies are planning to execute it or not to execute it, it is always advisable to take a firm view or a concrete view from an expert, especially their auditors, who are going to finally give a sign off in the financial statements of the coming financial year 2026, so that they do not come up with any observation with respect to non-compliance of any IND-AS or any guidelines or any FAQs from the Institute of Chartered Accountants of India. I think that's a fair point that uh, they should either adopt it or secondly,
Yes.
they should have some rationality of not adopting it in view of the experts' view only, not to take a just take an internal call or maybe going on with the some social media thing or media thing around it. So great, Dipa. Anything you want to add to this, Dipanshu?
Yes, sir. For this, even though the rules are yet to be notified, but ICAI clarifies that the wages definition becomes applicable from 21st November 2025. Therefore, additional gratuity liability must be recognized in interim results, such as quarter ending 31st December 2025. This is especially for listed companies and quarterly reporting entities.
Right.
Also, the impact cannot be deferred till March 2026. Secondly, this also aligns with India's 34 or AS25, which deals with interim financial statements, which requires to prepare the financial statements on year-to-date basis. So for this, I would conclude to your question that these kind of entities have to follow
Mm.
these amendments on immediate basis, such as listed companies and quarterly reporting entities.
Yes, I think, but I take a very important point that there is again a presumption by the ICAI that the wage code definition has changed from 21st of November 2025. By virtue of that notification, there is a lot of debate going on still on that point as well, because that wage definition not only impacts gratuity but other statutory payments also, right?
Yes.
And have a larger impact on the entire payroll structures of the company. So
Right.
again, so all these ambiguities and some clarifications will follow, and we'll keep on updating having some experts like you over this compliance shots of Lex Comply. And we also have an FAQ from you, which we'll be shortly publishing on our website, lexcomply.com. So thank you very much, Dipanshu, and to the KrayMan team for participating in this knowledge session on behalf of everyone. We take a sign off and we'll join for the next compliance shot soon. Thank you.
Thank
Thank
you
you,
so much.
Dipanshu.
Thank you.
Thank you.